Solved problems. Quick ratio. Comparison of quick ratios. Problem. The contents of three different companies' statement financial position as at 31st December 2021 given below. X Limited, Y Limited, Z Limited. Current assets. Inventory balance 1,250,000, 1,625,000, 1 million. Account receivable 1,55,200, 570,000, 1,350,000. Cash and bank balances 1,328,500, 1,432,650, 1,825,000. Total current assets for X Limited 3,633,700, Y Limited 3,627,650, Z Limited 4,175,000. Current liabilities. Accounts payable 1,172,500, 877,500, 1,875,000. Other payables 735,000, 536,250, 1,075,000. Total current liabilities for X Limited 1,907,500, 1,413,750, 2,950,000. Financed by equity capital 1,500,000, 2 million, 1 million. Retained earnings 226,200, 213,900, 225,000. Total finance X Limited 1,726,200, Y Limited 2,213,900, Z Limited 1,225,000. Total liabilities 3,633,700. X Limited, Y Limited 3,627,650, Z Limited 4,175,000. From the above illustration, above which of the companies gained the highest quick ratio on the operations, and determine the quick ratio. Current ratio. Current assets minus inventory by current liabilities. For X Limited, 3,633,700 minus 1,250,000 by 1,907,500. 3,633,700 minus 1,250,000 is equal to 2,383,700 divided by 1,907,500 is equal to 1.25 is the current ratio for X Limited. Similarly, for Y Limited, the current ratio is current assets minus inventory by current liabilities. 3,627,650 minus 1,413,750 divided by 1,413,750. That is 2,005,650 by 1,413,750. 1.42 is the current ratio for Y Limited. For Z Limited, the current ratio is current assets minus inventory by current liabilities. 4,175,000 minus 1 million by 2,950,000. That is 3,175,000 by 2,950,000. That is 1.08 is the quick ratio for Z Limited. When we compare the current ratios, the company Y Limited gives the highest quick ratio. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.